And then on Friday, MBS were down 14 basis points early. Stocks were up 24 points, which is a lot for the morning. Friday started with a noticeable increase in market activity and interest due to the release of important economic data. The Canadian employment report showed negative reading, which was unexpected and marked a significant deviation from the post-COVID labor market trend. This event, combined with recent market movements related to the Bank of Canada, indicates a potential shift in the inflationary forces and highlights the market's focus on potential indicators before the upcoming Fed CPI week. Despite an initial rally, U.S. bonds quickly retreated to their weaker levels, somewhat dismissive attitude towards the impact of the Canadian report early. Housing affordability improved in the first quarter of 2023. However, affordability remains an issue, according to the NAHB. This was driven by wage growth, with flattish house price growth and a decline in mortgage rates. Given the shortage of skilled labor and cost of building materials, new construction will have a limited effect on affordability, which means that wage growth will have to do the heavy lifting here. The Atlanta Fed GDP Now Index sees 2.2% growth in the second quarter. This is surprising given that the ISM data has been pretty weak and manufacturing and services economy seems to be decelerating as well. Global growth has been downgraded by the IMF, and China is struggling with deflation. So the 2.2 is going to be a tough one to get. We also got news that Tesla shares jumped 6% in pre-market trading and is on track to rise for the 11th straight session as General Motors announced it is joining the company's charging network. GM advanced 4.3%. DocuSign went up 5.3% after the e-signature company posted an earnings beat. The day with a hunt for a mystery mover for the 8:30 spike in Treasury yields. Once it was revealed, there was the Canadian jobs report. U.S. traders could only laugh as the two Canadian events had a visible impact on the bond market because Canadian news doesn't typically dominate the airwaves as much as the Canadian wildfires have been dominating the airwaves on the East Coast. While this is true, these events mattered on the week's small scale, the market is infinitely more interested in next week's CPI and Fed announcement. At the end of the day, we were down 5 basis points at 99.98, which puts us just above this thick, fat Fibonacci trend that has been a pivot line for about 2 weeks now. So now we're going to look at next week. We got a ton of stuff coming next week. Tomorrow is going to be one of the more volatile weeks in recent memory. On Monday, we have a 3-year auction, 10-year note auction. On Tuesday, we get core CPI and headline CPI plus a 30-year bond auction. On Wednesday, we're going to get the core producer prices. Then we have the interest rate projection, the Federal Open Market Committee economic projections, the Fed press conference, so we're going to get the Fed news. Then on Thursday, we're going to get the continuing claims and the jobless claims, which will carry a lot of weight because it's going to be a lot of predicting based off of what the FOMC says on Wednesday. We also get retail sales, and then 2 Fed speakers on Friday, one being Bullard and the other one being Waller, which tend to move markets, and consumer sentiment. So tons of stuff. Get rested up. And if you have a little bit of time over the weekend, check out our common sources and influence at thatmakesense.com as well as all the others. Have a great weekend.